Hi guys, and welcome to the Harav Benjamin Show. So today's stock we're looking at is Alibaba, as they've recently just reported their Q4 earnings. Q4 earnings, sales came out better than expected. However, their bottom line, for some reason, we had a low bottom line. Look at that, I highlighted there. Profit margin was only 7% compared to an average of about 25%, while free cash flow margin average of 30% ended up at 10%. So a few red flags that we've got to look into there. But right now we've got to wait till their full year-end report comes out to have a proper look. But just to give a quick valuation based off today's numbers, we had free cash flow coming in at 5.8. That's a lot lower than 2021. That's pretty much at 2018 levels, 2017, 2018 levels. And sales have been up, so that's not too bad. So what in my evaluation, I'm gonna have a look at the average of I'm gonna look at their profit margins for now at the 20% range, and I'll give a worst case scenario of about 10%. However, I think this is just a one-off, but we'll see what we can get. Growth, as we can see, it's just grows like crazy. 30% growth. You got that. So over here, this is very, very low to what it should be like. This is very conservative. As I said, let's put the low at 10%. Just like that's worst case scenario. 3% is super low. I reckon we can move this up to 5. This should be up to 5%. Although, like, let's just go look at the 10%. Anyways, yeah, let's keep it at about 12%. We can put it at 12%. And so this is like the absolute worst case scenario. I do not think this is staying at 12%. I think it's just one-off charges. I'm pretty sure the reason is, not certain, that it's because due to share price. I think in the gap reports it includes share prices, fluctuations into your profit and loss, which is one reason why it's low. Another reason could be because they've had some fines from the government, from the Chinese government. But we'll read the annual report later on when it comes out to get a full understanding. Average 20%, 26%. Yeah, that's fair enough, because if you look at historic, it was at 30. It should be really at 30%. Last year was 20%. So like 26% is pretty, like, yeah, I would call it high. You can even go a bit lower than that. But this is the actual 5-year average of their historic, of their free cash flow and profit margins. So what we have here is a valuation, the absolute lowest. I think this is like super conservative. 5% growth for Alibaba is crazy. Like, let's say super conservative, 3% growth, so pretty much zero growth. Chinese company that's negative, a lot of growth. Let's keep it at 5. So that's the lowest, I think, $65. I'm actually currently placing selling puts down at $65 on this company, as this is a super conservative price. And I've got them valued at around $330, where they're currently selling at about, I think they're about $90 today. Before this earnings came out, they were in the 80s. Now they've hit 90. Look at this current ratio. Not much debt in this. This is a company I own. I'm looking to buy more. I'm selling puts at $65, as this is a super conservative price.